Today we're diving into the top 5 stocks to buy in the month of June 2022. I spent hours of research going over hundreds of different companies, and I found a few that I believe to have huge growth potential this month. Now you're going to want to watch this video all the way through because I'll be giving my full analysis on each of these stocks, and I'll be covering relevant news, significant numbers, price action of the stock, and my price predictions. Warren Buffett says to never invest in a business you don't understand, so by the end of this video my goal is to have you understand why you would invest in each of these companies. So without further ado, let's get into my top 5 stocks for June. The first pick is tech giant AT&T, or stock ticker T. They recently announced that they will raise prices on some of their legacy unlimited and mobile shared data plans starting June 1st. According to an analyst, this price hike suggests that AT&T is making 2 important bets. The first one is AT&T is betting that its network is worth customers paying more. Second, AT&T is betting that Verizon and T-Mobile won't respond with a price hike with a marketing push to lure these customers away. Ultimately, these price hikes will help to drive customers to their unlimited plans, which provide better value for the customer. On May 23rd, CEO of AT&T, John Stankey, indicated that the company is working with state and local governments throughout the US to successfully participate in the Affordable Connectivity Program by providing affordable broadband connectivity to low-income customers. Taking a look at key data, we can see that AT&T shares pay a 5% dividend. They have a market cap of $151 billion. Their PE ratio is 8.8 and their EV to EBITDA is 6.4. In terms of risk, we can see that the beta is 0.62, which indicates a very safe pick. One of my favorite metrics to look at is free cash flow, which indicates the amount of money available to be reinvested in the company. Here we can see that it has a quarterly cash flow value of $20.5 billion. Revenue is currently at $163 billion. Now, if all these numbers make sense to you, great. If not, I'll link a video right here that will explain exactly what all these numbers mean. If you're new here or simply new to investing, I highly recommend watching this video before continuing on with my top stock picks. Taking a look at the chart, we can see that AT&T has been in a downtrend. Nothing to be alarmed with here, it's just cooling off and following market patterns. I'm looking for a price to break above this key level at $21, which would also be a break of this downtrend line in green that started at the end of 2019. From there, I can see price rallying to $25 within the next 6 months. Analysts have AT&T as a buy with a $26 price target. Next on the list is Simon Property Group, or stock ticker SPG. This is a real estate investment trust that owns, develops, and manages real estate such as malls, community centers, and outlets. Analysts absolutely love record leasing volume, retail demand for physical stores, and the low debt rate as catalysts for their success in the coming months. Also, SPG recently announced a $2 billion share buyback program. SPG has a dividend of 6%. Their market cap is $35 billion. Their PE ratio is 15 and EV to EBITDA is 12. In terms of risk, this is a relatively safe pick with a beta of 0.5. Quarterly free cash flow is about $3 billion. They currently have a revenue of $5 billion. Now, for those of you who have been with me for a while, you know that I usually show you the financial side of the company on Yahoo Finance. However, I recently partnered with Benzinga Pro, and they are game changers when it comes to doing research on individual companies. As I preach in just about every video, education is key, and you have to know what you're investing your hard-earned money in. From detailed earnings reports to charts to expert analysis, you'll find that you know so much more about your investment than you will with other free sites that may be lacking a lot of the features found in Benzinga Pro. So anyways, if you'd like to check out Benzinga Pro, feel free to try it out for free at the link in the description. And if you fall in love with it, hey, you'll get a pretty sweet discount too. Anyways, back to the good stuff. Looking at the chart, we can see that SPG has been on a major uptrend since the COVID crash in March of 2020. Recently, SPG shares have tumbled along with the rest of the market, and shares are currently trading at just over $100. I expect price to continue on a positive trajectory and view this recent downtrend price action as just a correction. Price is approaching this green line of support, which I expect to be the area that price bounces from. If it can hold this level of support, I see price first heading to 130 and then to 170. Analysts have SPG as a buy with a price target of 173. Next on our list is International Business Machines, or stock ticker IBM. This is an information technology company that offers products including infrastructure and software. Analysts believe that tech spending will outpace GDP growth, and IBM should continue to be a beneficiary of the Ukraine crisis, especially in its Europe market. Revenue growth is also anticipated to continue, and this is reflected in its recent price movements. While the Nasdaq has dropped 27% on the year, IBM has just lost about 2%. Considering how poorly the tech sector has performed in 2022, this is a very encouraging sign. This points to a change in investor sentiment as they rotate more into steady growers in the sector. IBM has a dividend of 5%. Its market cap is $120 billion. It has a PE ratio of 24. It also has an EV to EBITDA of 13. In terms of risk, IBM has a beta of 1.2. Its free cash flow is $8.5 billion and revenue is at $58 billion. Looking at the chart, we can see that price is currently on an uptrend. I expect price to continue to hold its current level or come down to this area of 127. From there, I see a breakout past 134 to 144. Analysts have IBM as a buy with a price target of 166. Next up on my list of top stocks to buy this month is Merck, or stock ticker MRK. This is a pharmaceutical company whose anti-cancer drug, Keytruda, has become essentially the gold standard in terms of treating non-small cell lung cancer. It has also been approved to treat skin cancer, bladder cancer, and some breast cancers. In 2021, Keytruda was 4th on the list of highest pharmaceutical revenue generators, and it shows no signs of slowing down. Merck has a dividend of 3%. Its market cap is $239 billion. Its PE ratio is 17, while its EV to EBITDA is 12.9. It has a free cash of $12.7 billion. They are also sitting on $54 billion of revenue. Taking a look at the chart, Merck has been on a monster tear as of late. Price is currently sitting north of $90. We can see that it broke out of its near-term channel, and ideally I'd love to buy in as price approaches the top of the channel, so I don't think this is a buy just yet. I'm liking this $89 range as an ideal entry point. Analysts peg Merck as a buy with a price target of $107. Rounding out our list of top stocks to buy in June is Citigroup, or stock ticker C. Bank stocks have been held back in recent weeks as the market is worried about a looming recession. However, labor market is tight, and this leads me to believe that despite inflation, consumers should stay relatively confident. Also, we saw a significant delay when it came to rate hikes, which shows that the Fed may not be trying to tackle inflation as aggressively as some may think. In Q1, Warren Buffett bought a 2% stake in the company, which can be taken as a sign of his optimism regarding the US economy at this time. Citi has a dividend of 4%. Its market cap is $102 billion. It has a PE ratio of 6. Its beta is 1.7, which could indicate a slightly riskier investment. Free cash is $20 billion. And lastly, their revenue is $71 billion. Looking at the chart, we can see that Citi is on a downtrend with prices sitting at a little less than half their June highs. Price fell below its downtrend but has recently emerged back in this downtrending channel. I expect price to establish a bottom around this $49 range, and from there I could see a push to 60 with additional strength pushing price to $80. I'd expect Citi to reach these levels within the next year. Analysts have Citi as a buy with a price target of $93. Well, that does it for my list of top stocks to buy this month. As you may have already noticed, I've included exclusively dividend stocks on this list. With such high volatility in the markets, dividend stocks can be a safe way to hedge, as you'll be getting cash simply by holding on to the stock. These companies all have a really solid history of dividend payouts, with some having a history of increasing their dividend payouts gradually over time. Anyways, if you got any value out of this video, please feel free to leave a like and subscribe to the channel if you haven't already. If you know of anyone who is looking to invest right now, be sure to share this video with them. I look forward to seeing you all in the next video. Peace.